to the IBC guys. I'm Dave. This is
Mike.
so it's nice to see you. So as you maybe can tell by our wonderful background, our setup here, we're just a couple of guys hopping on, and our goal in doing this episode today, and in the broader context, the podcast itself, is just to help people. That's our goal. Mike usually laughs or smiles at me. We try. The saying I say is, we're a couple of beggars helping other beggars find the bread. That's the goal of this. So you're not going to find a professional podcast here, but what you are going to find are two guys that want to help out, and we think we have something that really can help people out. Um, so let me jump into it. The goal today, what we're looking to do is provide an initial introduction to what infinite banking is, um, what it is, what it does, why it's helpful. Talk through how we're using it. I'll give my personal story, and then in the next, subsequent episodes, we're going to get into really some more granularity. Those are bigger words. So we're going to be more specific in how we address it. But the goal today is just to introduce it. Anything you want to add to that?
Yeah, and I think as far as you know, going online and researching IBC and how the infinite banking concept works, finding out more information. There's books, videos, some good, some bad, like really all topics you want to
Yeah.
go down a rabbit hole or whatever. So we wanted to provide some content that you know we feel is more accurate that we can
Yeah.
provide, and then secondly, Um, I know when I have clients that come to me, it's not, where can I go to find more information and to send them to someone else's site. There's lots of videos out there, and they're all really good. They're professionally done. They have graphics. That's not us, but I always feel a little guilty sending people to someone else's content, almost like I'm kind of using their stuff. So our goal is to provide education to our clients and to
Mhm.
our friends that we can send them to. That's ours, really.
So just to be clear, this is what we do. So we help people build policies that fit into what they're already doing. This is IBC, so infinite banking, it's otherwise known as IBC, is not an and or situation. It fits into what you're already doing, and I'll explain a little bit more about that in this episode and how my wife and I are using our policies specifically. But just to what Mike said, the goal is to provide information that's practical, that is applicable, and that can be understood. That's our goal. So that's what we're going to try and do today, as well as in all the episodes that are coming up later here. All right, I'm going to go into internet mode, Mike Stevens. So I'm going to ask you, what is infinite banking?
So infinite banking, well, first and foremost, I don't know if we can get this on the maybe around the microphone here.
So for those of you listening, you won't be able to see this.
So yeah, so for the video people, but Nelson Nash is really the pioneer of the infinite banking concept. So we say IBC, and if you're thinking like, what is IBC? This is the infinite banking concept, pioneered by Nelson Nash, and this is a great book for you to start. Most everyone starts here.
What's the title of the book for those listening?
Becoming Your Own Banker by R. Nelson Nash. Unlocking the infinite banking concept.
And that's kind
That's
of
the
like the
IBC.
genesis of all of this, correct?
Correct. He is the pioneer. And when I am initially talking with clients and talking to people about what is IBC, generally the conversation goes to, an investment, what's the return, and what if I put this in, what's my yield, what's my ROI? It's not an investment. IBC is a cash flow system,
Yeah.
really. It's a process. I think it's best to give an example of the difference between savings and investing. So, for example, let's say a normal household, well, average I know is probably much less than this, but let's say a normal household, husband and wife bring home $100,000 a year. We'll just use that it's an example we can
Sure. Nice round
do in our
number.
head. Nice
Yeah.
round number. So $100,000 a year, take home after taxes, that's what you have to live off of is 100,000 a year. And Generally, the rule of thumb would be like you want to save 10%, put 10% into qualified plan or investing, or hopefully you're living below your means and saving 10%
Yeah,
of your
yeah.
income. On average, the American population, we're terrible savers as a country. I think a few years ago I saw where the stat was 4.7%. I don't know what it is, but it's not 10%. Well, let's assume it's 10%. So let's say you have $100,000 annual income
Mhm.
and you're saving 10% of that. So that's $10,000 that you invest with invest with your investment guy, your financial guy, qualified plan, and whatever. And people generally tend to think they're getting a much higher return than they actually are. And of course, this is usually pre-tax. But let's say you're getting 10% return
Very good.
pre-tax on your $10,000 a year. So 10% of 10,000. So you're making $1,000 a year. So $1,000 a year is coming into your family. I keep hitting this microphone here. So you invest 10,000 a year, you have $1,000 that your investment is bringing into your family, back to your family. What people don't realize is the money that's actually flowing away from their family. As an example, so most people would have a home and have a mortgage. And when I talk with people and talk with clients about, so you have a mortgage, what percent of your income are you paying
Yeah.
interest to the bank? And most everyone says, "Oh, Mike, I got a good rate. I'm paying 3.4% or I'm paying 4%." I mean, it's kind of gone up and down here in the last few years to I've heard some rates under 3 and some, pushing 7 on 30-year money, but
Yeah.
well, let's just say that's in that, 4% range. Well, if you look at your amortization on that mortgage and, whether it's let's just say it's a $400,000 home, your P&I for that is probably going to be somewhere around that, let's just say $2,000 a month range for principal and interest.
Okay, I was gonna
Okay.
ask. P&I is principal and interest,
P&I is
right?
principal and interest.
Okay.
So $2,000 a month. And if you look at that amortization on principal and interest, you are paying over 70% of that $2,000 payment towards interest.
Yeah.
So if you look at that on an annual basis, even if it's 60%, that's 1,200. I know 12 times 12 is 144. So that's 14,400 flowing away from your family through the banking system. Where again, people think that I have an investment that I'm getting 10% return on, but my home, I'm only paying 4%. Whereas in actuality, you're paying
Well,
14.4% of
yeah,
your
that one.
annual income on 100,000.
Yeah.
So you have 14,400 moving away from your family and $1,000 coming in on your investment.
Mhm.
So what we want to do, what the banking concept, the infinite banking concept helps you do is set up a system to recapture that money and reverse the flow of money coming into your family versus flowing away from your family.
Yeah, so to say that a different way, just kind of the opposite. Instead of going away from your family, we want the IBC system is set up to have that money come back to you, which sounds too good to be true. And I'm going to kind of reiterate what Mike is saying here in a way that's applicable in our family's lives. So I'll share that here in a minute. But you just gave a good definition of something that everybody can relate to. I would say everybody, most people can relate to having a mortgage on their home. How can you give an example of how IBC can have that money flow back? And maybe that's getting too into the weeds a little bit from the onset. Can you give an overview of how that money flows back to your family rather than away from your family in that example?
So, well, the idea is to capitalize this system. It's like a checkbook where if you have a cash flow system, everyone has a cash flow system. Everyone is already doing banking in their family today. They're
Yep.
just doing it a different way. We're just going to change the way the banking function works in your life. So, if you look at it from a checkbook standpoint, you have to fund the checkbook before you can write a check.
Yep. That makes sense.
And we're basically where you're putting it in a commercial bank. We're basically
Mhm.
putting it in our own bank excuse me, where instead of putting it in someone else's bank, and you would say, well, what's the advantage of putting it in, the disadvantage of putting it in someone else's bank? So this is how banks work. Um, let's say you deposit $100,000 into a bank and they're going to pay you 1%. And again,
Yeah.
it's
Yeah.
changed. A couple years ago, you weren't going to get 1%. Now it's probably a little bit over that. But let's just say you put $100,000 in, the bank pays you 1%. So they're paying you $1,000. But are they going to keep that money just sit in the bank?
No,
No,
sir.
they're going to use that money and they're going to put it to work,
Mhm.
and they're going to give out a loan probably at 5% on that $100,000. So they're going to pay out $1,000 to the depositor, but yet they're going to make $5,000 from the creditor, the people that borrow the money.
Mhm.
So 5% on the loan, and they're paying 1% on the deposit. So most people think, well, that's simple math. The bank is making 4%. They're not making 4%. They're making 400%. So they're making $4,000 profit because it cost them 1,000. They're making 5, so they net
Mhm.
4. So if you had $1,000 investment and it went up 500 over a
Wow.
year to 1,500, that's a 50% return. That's fantastic,
Yep,
right?
I'd be happy with that.
Yeah. Where this is $1,000 investment and you're not making 500, you're making 4,000. So
Yep.
it's 400% return on their money. So, and that's just the banking function. That's
Yeah.
the advantage of having your own bank, where you're using someone else's money and getting a much higher return because you control the banking function. So that's kind of getting into the weeds here, but the idea is to take control of the banking function in your life. That's what we help people do. We help people set up their own family bank.
So I'm gonna try, Mike, say it a different way. So you take your money, you're gonna put it into your own bank. And that sounds a little when I first heard that, I was like, what does that mean? That's what Mike and I are gonna explain over the course of these next podcasts. But to stick with me, you're gonna put it into your own bank. From there, you're gonna use your own money to then go fund things that you're already funding. But that money is gonna stay on the ledger. In other words, if I put $1,000 in, I can borrow against that $1,000 and go use it, keep that $1,000 making dividends and interest, but I start that cash flow system. I pay myself back just like you would fund a checkbook, like Mike said. You put that money back in, it's going to go back out to pay for a car payment or to pay for groceries or whatever you're funding this for. Put the money back in, it goes. But all that time, you're your own bank and you are making money on your money. So that's kind of again a 30,000 foot view of what this thing looks like. Thoughts on that? Is that just kind of a different way to
Yeah.
look
Yeah.
at it? Okay. So there it's an abnormal concept. And I speak from experience in this. It's not something I was taught until Mike showed me how this thing works. And I couldn't have it in what we do fast enough from that point. So once I understood it, I wanted to implement as quickly as I could. Um, so before I transition, because I want to give everybody an example of how we use it. Do you have anything more you want to say about kind of what IBC is? Too broad of a
Well,
question, but we're
yeah.
we're starting
We
somewhere.
should have we'll have another podcast or
Yeah.
episode where we go into very specific, like how to run certain things. Like if I like to use a truck example. Everyone drives a vehicle, and how to run a vehicle through your banking system and how to recoup
Mhm.
all that money. The main advantage, normally when I sit down with people and they go, what is this IBC? What is this infinite banking concept? Like, what is it? Well, that conversation is a long
It
conversation.
takes a little bit.
But I start with, like, before I get into like what it is, let me tell you the benefit of it in like 30 seconds. The benefit of it is you basically set up a cash flow system, like a checking
Mhm.
account, and you have to capitalize it. You have to put money in there before you can write a check, just like the checkbook at your bank. But all the money that you run through there over time, not right away, but over time, like 20 years time, comes back to you.
Mhm.
So
What do you mean by
you
comes back
think
to you?
about that. Yeah, that's a big statement.
It's a big statement.
So let's say, for example, you buy a $50,000. I'm a pickup truck guy,
Yeah.
Dave, as you know. Let's say you buy a $50,000 truck every 5 years. So let's say you put $10,000 a year into a checking account. And year two, you're going to have 20. Year two, you're going to have 30. At 5 years in, you're going to have $50,000. You can buy a truck. Right?
Yep.
And then year six, you start putting $10,000 in again, because 5 years later, in year 10, you're going to buy another truck. Trade
Yep.
that one in and buy another one. So if you do that over 20 years, you're going to buy 4 trucks. You're going to spend $50,000 truck, $200,000 total. And what are you going to have in your checking account?
$0.
Zero. What this system does is you do that same thing, $10,000 a year, buy 4 trucks over 20 years, spend $200,000. The difference is at the end of 20 years, you don't have zero, you have 200,000.
So this is the hard stop for me when I heard this. What Mike just said is you have 4 trucks, you've spent $200,000 on those 4 trucks, and at the end of 20 years, you have $200,000 in your account. Am I hearing that correctly?
Correct.
I think you can understand why that was a hard stop for me. I was like, that no, that's too good to be true until I started learning this stuff. So again, going back all the way to the beginning, that's our goal. We want to help people do this because it is my opinion, I think it's Mike's as well. There is no better system to build legacy wealth than this right here. Again, what Mike just said is he spent $200,000 and in his account is $200,000. That is bunkers. It doesn't make sense, but mathematically, systemically, it worked. And that's what we're here to try and do. So I'm going to cut you off there because we're going to do an episode on the truck itself.
For sure.
I would like to kind of give another application of how we use it. My wife and I, we own a land business. We buy and sell vacant land. It is essentially dirt. There's no houses. There sometimes electricity, sometimes not. It's dirt. But what we have found is we need funding to do this. And to Mike's point, if I buy a piece of land for, let's say, $10,000, again, nice round number, that $10,000 is in that piece of land. With IBC, with the infinite banking concept, I can put that $10,000 in my account and then I can borrow against that, go use it in my land business, still have $10,000 in my account and go buy that piece of property. Again, it sounds backwards, but that's what my wife and I do. And as soon as I understood this, I couldn't implement it in our business fast enough because not only are we able to buy the property we need to buy to continue the cash flow for our business, but we are building, compounding, legacy building wealth within this IBC policy. So again, we may do a podcast episode on that, but that's specific to our family. We use it to not only fund our land purchases, but we are building our own bank at the same time. In fact, we have 5 banks. We have 5 different policies. We have 5 people in our family. That'll be another episode as well. We got so many ideas. We got so much good stuff to talk about. It's kind of why we wanted to start this. We're not professionals. We're a couple of guys.
Tell that by our
Yeah, we're a couple of guys that enjoy each other's company. We like talking IBC. To what we do, and we want to help others. I'll go back to a couple of beggars trying to help other beggars find the bread.
We decided that, as we mentioned kind of early on, that we really, it was Dave, like we should do a podcast. We should do videos. We should do what I guess we're trying to do right here. And my initial response
Was absolutely, I'm all in.
that's not true.
What was that?
There's no way I'm doing this. Like, no, I'm not. I don't want to do this. But I can see the benefit. Anyway, we talked about this. Like, okay, I finally agreed. Like, all right, I'll do this. It's going to be beneficial. Hopefully, it will be beneficial. That's our desire.
Yeah,
that is
that's our goal
and beneficial. And Dave and his family are up here. This is we're at my house right now, and we just decided again. We really don't have a script. We don't have. We were just hanging out. We're like, while we're here together,
let's do it.
we might as well like do one while we're together.
Yep.
Which ones?
I'll be at my house. Michael probably.
Yeah,
Yeah.
Dave lives in another state.
Yeah.
Um, so we'll be doing this kind of on a split screen, maybe,
Yeah.
right?
Yeah. It'll be
So
split screen. So I'll be in my office. You'll be
so yeah, lots
around.
of episodes that we should do, smaller and obviously more specific, but the it's just kind of an introduction video since we're together. We figured we'd do it.
Yeah.
But starting out and when I first got introduced to this and a buddy of mine said you need to pick up this book and read the book. And it's a short book. This is like a 92-page read. Uh it's pretty quick. You can read it in a couple
Hmm.
hours. And I originally thought I'm going to sit down and I'm going to read this, knock out a chapter or two. This is like at 10 o'clock at night.
Hmm.
I'm going to just read a chapter or so before I go to bed. I couldn't stop. I read it cover to cover my first sitting, and I went to bed and I literally laid in bed wide awake. And the two things that bothered me the most, one, or that were keeping me awake, one, the excitement
Yeah.
that I had, like this can be so
Mm.
beneficial to me and my family.
Yeah. Absolutely.
That was half of it. The other half of what was keeping me awake is I was so frustrated,
Yeah.
kind of ticked off
Uh,
that someone didn't tell me about
mm.
this 20 years earlier.
Yep.
And there's reasons for that. And again, we could do a whole nother episode
We're going to,
on
Mike.
why that
We're
is,
gonna do it.
on why that is. But if you look at we mentioned banks before, the the big banks, all the banks in the United States, and I'm talking the big banks, the Wells Fargo, the Bank of America, the U.S. banks, the J.P. Morgan Chases of the world, all those big banks, they all do this,
Mm.
and it's actually has an
When you say
acronym.
do this, I'm gonna stop
They
you.
all do the infinite banking
Okay.
concept.
All right.
They all have this system set up to where all the things that they run through their banking system
Yep.
comes back to them. Again, not right away, but over time, about a 20-year period, give or take. And it starts climbing towards that. And then after 20 years, it's even, it exceeds it. We'll kind of go into that. But kind of the break-even point of everything you run through your system is about 20 years,
Well, and I'll
so to
add one
speak.
clarifying thing. Most people understand exponential growth. This is an exponential growth thing.
Correct.
So I like to use the term hockey stick. So when Mike says that 20 years, then you start hockey sticking and you're talking legacy wealth. Legacy wealth. I like to say the grandkids of your grandkids are going to benefit from this. I mean, you're talking a long-term play that can be applied now. Maybe that's another way to say it. It's a long-term play that can be applied now. So I cut Mike off. I just get too excited about it. So I'm sorry.
No, that's fine.
You're talking
That's
about
fine.
banks, how they use it.
Well, the bank, and you can Google it.
Yep.
So there's an acronym, BOLI, BOLI, which is bank owned life insurance.
Yep.
And we haven't talked about life insurance yet. Maybe we'll
But
have to edit that out
we're
of here and go.
no, we're just talking about it. We're just introducing infinite banking. That's all.
So these banking systems that we set up, I guess real quickly, might as well
Mhm.
go there, is actually inside of a very specifically designed whole life insurance policy with a participating insurance company. And we use different ones depending on what fits best for the
Mhm.
client. But right away, my first reaction to that was, wait, what life insurance? That why would we use that? The only reason why we use, or one of the main reasons why we use the life insurance policy is because it's the only financial vehicle that predates the tax code of 1913. The Federal Reserve wasn't formed until 1913. Prior to 1913, there were no taxes at all in this country. There weren't any income tax, federal income tax prior to 1913. This is the only financial vehicle that predates that. So I think when they formed the Federal Reserve Act of
Mhm.
1913, they kind of grandfathered, if you will, a life insurance policy in, and there's huge tax benefits. If you run this properly, it can be a tax-free financial vehicle.
That's a
So that's
benefit we haven't talked about.
that's why we use that. So we can discuss that more later.
We will. We're gonna discuss it later.
But if you Google BOLI, bank owned life insurance, they have tons and tons. Well, I think Wells Fargo has 34 billion. That's with a B,
Mhm.
not million, but billion. $34 billion of assets inside of this kind of infinite banking concept
Yeah.
system that all these banks use. The Fortune 500 companies use it. So all of these, the elites use it, the millionaires, all these people and companies are using this system, but yet they don't tell you and me about it
Yeah.
because they want us to put our money into a qualified plan or just sit over here, and then our need for financing to buy homes and cars and food and vacations and colleges, everything that runs through your checkbook, they want us to go to the bank and use their system.
Another way I've heard it phrased is they want you to put your savings into their qualified plans, whether it's a 403b, 457, you name it, 401k, doesn't matter. And then so you put your savings in their system, and then you borrow for the rest. This eliminates that. Um, we gotta cut it back. We keep going. So
We need
quick.
to have a script.
Well, we did it. But quick example to this. We had a check come into our bank from our company. I wanted to use that to buy another piece of property. The bank said, "Nope, there's a hold on it." I said, "My money. Need it now? Give it to me." So I had to haggle back and forth. It was a whole thing. Infinite banking, I tell them it's in my bank account, no questions asked. It's a non-taxable event. We'll get into all this. But what Mike's saying is get your money out of the system, have it be yours, become your own bank. I'll go back to that. So, for sake of time, though, I'm going to cut us off right now. I do want to end with two things. One, application. We always want to have an application in our episodes. How can you go apply this? What can be done next? Our um, admonishment, our advice, whatever words you want to put there. Go do some research. Go find out about infinite banking. There is information out there. We're hopeful that we can be a solid source of information with this podcast, with these episodes coming forward. But start doing some research. Start looking into it. It's hard to ignore the benefits. And then we are here to help answer any questions. That's our goal. Help people. The last thing I want to end with, and I'll ask Mike if he wants to add anything after this, but I'm reading this book here. It's called The Richest Man in Babylon. But there's a quote in it that I thought was very applicable for the initial podcast episode. It says, "Proper preparation is the key to our success. Our acts can be no wiser than our thoughts, and our thinking can be no wiser than our understanding." So I'm going to read those last two sentences again. Our acts can be no wiser than our thoughts, and our thinking can be no wiser than our understanding. So our goal, Mike's goal, my goal, is that you understand what this is, and then you make a decision moving forward. If you don't want to do it, that's great. But to understand it is what we want to make happen with everybody. Give them the option and then make a decision and move on from there. So anything else to wrap up?
I think that's
There's
good.
lots more to come. That's what we're going to say. We're excited to do this. Um, uh, yeah, we are. Mike is. I do. It's new to both of us, and you can probably tell. But both of us understand the benefit. So I think we're excited that the benefit it can bring, hopefully bring to everybody that gets a chance to listen or decides to take the time to do so. If you would subscribe, there'll be email in the show notes. Give us a shout via email. We just want to talk with you. We're a couple of beggars helping other beggars find their bread. All right. Have a good day.